How's it going, guys? My name is Ishan, and in this video we're going to be talking about the new EV SPAC that could 10x. Like, this stock could be huge, but along with that we're also going to be talking about the one major risk, because I'm not just going to pump this stock up just because it's a SPAC like all these other YouTubers. I'm going to give you both the pros and the cons, and then along with that we're going to be going over my exact strategy and a quick technical analysis at the end as always. So if you appreciate these short and value-packed videos, make sure to drop a quick sub and let's clock in. Real quick, congrats to anyone who benefited off the BFT play I called out when it was at 14. Along with that, 8x8 just continues to hit all-time highs. We called it the best stock under $20 when it was at 18. And then Domo is continuing to soar, same with Elastic. So congrats to everyone who bought these stocks. But anyways, the company we're talking about today is Lightning eMotors, and they're merging with Gig3 Capital. And by the way, quick shout out to Jason's Kitchen for the call out. This company was totally flying under my radar, and in fact today I picked up a starter position of 30 shares at 15.3. So the SPAC deal is expected to close in the first half of 2021, and the company will have a pro forma enterprise value of $651 million, and overall they will have a total of $273 million of cash on the balance sheet, which also includes the cash they have right now. So now let's talk about what the company actually does. So what they do is they install electric powertrains on class 3 to 7 vehicles. So let's say you're a company and you have 10 trucks. Instead of upgrading your entire fleet and buying all new electric vehicles, instead what you could do is you could go to a company like Lightning eMotors that will install electric powertrains onto your current trucks so that you don't have to waste a lot of money upgrading your entire fleet. Apart from just placing powertrains into existing vehicles, the company also sells the vehicles straight up. To give you an example, one of the biggest part of their businesses is that let's say you wanted a Ford truck but you wanted it electric. You order it through Lightning eMotors, and what they do is they have partnered with companies like Ford to receive the chassis and bodies, and then they install their electric powertrains onto that vehicle and then sell it. So it's a pretty smart business model. We see hyllion doing XL Fleet, but the company will be bigger and potentially 10x for a few reasons. And the very first reason is that they're converting these vehicles into zero emission vehicles and not just hybrids like XL Fleet. Because if you think about it, if you're going to be upgrading your fleet and you're going to be installing powertrains, or in fact, buying electric vehicles, why would you want to go with a hybrid version when eventually the mandate is going to be zero emission vehicles? As an example, California said that all vehicles sold must be zero emission vehicles by 2035. They already have 120 vehicles operating as of today, and they have 150 million fully contracted orders signed and ready to go. Along with that 800 million in pipeline, meaning they're currently working on deals that could tally up to 800 million. And one of the many big things that people don't even talk about is that their vehicles purchased by fleets in California are eligible for special funding via the California Air Resource Board and Hybrid and Zero Emissions Truck and Bus Voucher Incentive Project. The voucher program can reduce the upfront cost of advanced zero emission fleet vehicles by 30 to 70%, meaning they're just the obvious choice. Now let's talk about the second reason why the company will soar, and probably the biggest. And that is that they have established manufacturing and actual partners. They have a factory that has been operational since 2018, which they own. They're not contracting their manufacturing or production to other companies like we see a lot of these new EV SPAC companies doing. This makes them more vertically integrated, and now they control manufacturing and production, so they can scale up and down whenever they want. In fact, they've locked in 100% of 2021's orders, with 63 million locked in, and 25% of 2022's projected revenue of 354 million, which is roughly 90 million. And in fact, according to their CEO, they will be EBITDA positive by 2022, which is great to hear. These other SPACs we're taking a look at are promising future revenues. They're all saying, yeah, we're going to be doing this much revenue down the line, we're going to be doing this. But Lightning eMotors is actually producing right now. They actually have orders right now, and they're actually making making money right now. So this is a company with established manufacturing, established clients, and they have the contracts to prove it. They also have charging solutions and networks built by themselves and with Plug Power, another company we love on this channel. That's gonna bring recurring revenues, and from what I've looked into in their charging business, essentially what they do is upsell their current clients. They go to them and say that, hey, we're providing you with this fleet, but you're gonna need to charge them, you're gonna need chargers, and that part of their business takes control of setting up the entire charging infrastructure for their clients. And then they sign a 10-year contract bringing in recurring revenues. And I can't believe that a lot of people are missing this very big point, because charging solutions are going to be huge down the line. You're going to need to charge them, and so something like this, which they've definitely seen the need for, is just going to bring them continuous recurring revenues and just make them a whole lot of money. And then as for their partnerships, there's some pretty big names associated with this company, but truth be told, these fancy names don't actually make up most of the customers yet, with most of the orders coming from still blue chip fleet customers, including Fluid Trucks, ABC Companies, Ace Parking, and California State Hospitals. But that doesn't mean that they won't get significant orders from these huge companies down the line. Currently, Lightning eMotors has a contracted order backlog of approximately 1,500 vehicles for delivery in 2021 and 2022, including the world's very first electric Class 6 truck. They claim to have the country's largest commercial zero-emission fleet vehicle manufacturing facility in the US, with annual production capacity of 1,000 vehicles today and expanding to 3,000 in 2021 and over 20,000 by 2025. And by 2025, this company predicts that they'll be doing $2 billion in revenue. A lot of these new EV SPAC companies like to throw out all sorts of numbers, like we'll be doing 20 billion by this much, we'll be doing 5 billion, but those numbers are kind of hard to trust. But with Lightning eMotors, I could see them actually doing that revenue, because as we can see right now today, they're actually producing, they have the manufacturing, they have the contracts, so this company is legitimate. And so while this company is still speculative, I will give it that, at least they have real technology that works and legitimate orders. And now for the big risk, which could be seriously bad for their business. And that risk is plain and simple lack of adoption. All companies will eventually move to electric. That means a lot of new vehicles sold will be electric. And so long term, if every new vehicle is sold, or at least the majority of new vehicles sold are electric, then there won't be any need for a company like Lightning eMotors, who simply just equips current vehicles with electric powertrains. Because the vehicle you're equipping with a powertrain is all to get around regulations, but eventually when lifespan runs out, you just want to buy electric eventually, not buy a gas powered vehicle and then add an electric powertrain. So I don't see this as a major problem for a while, but eventually you're going to have to think that if every manufacturer is pumping out EVs, then what's the need for a company like Lightning Motors? As for my strategy, well, as I mentioned at the beginning of the video, I picked up a solid 30 shares as of today. It's just an initial position, nothing too huge, and so I expect trading to continue to be choppy down the line until merger completion. But regardless, I believe that this stock could easily head over $20, especially when the actual merger date is announced, which we're still waiting for. There really doesn't even have to be a fundamentals play to this company. They're simply an EV company that's a SPAC. Simple as that. If you just look around the market, every EV SPAC has at least 2 to 3x, and this is just another company that I think will easily cross $20. So I'm just gonna hold and wait, and as for when I plan to buy more shares, that leads me to the technical analysis. So currently the $13.8 area is the next level of support to look for, and what you want to look for is it turning that previous resistance it had in that area into support, like we actually recently did. And so that is just textbook technicals. And below that, the 1080 level is where I would absolutely load the boat, but chances are we probably don't actually see that level, but those are essentially the key support levels to watch. Apart from that, we've been forming higher highs and higher lows, and it actually looks like we're forming an ascending triangle where it has resistance at the 15.8 area. Usually ascending triangles are a big sign of a huge move higher, and considering all the facts that it's first of all an EV SPAC, it's probably probably gonna happen. So make sure to like, subscribe, and if you want to support the channel, check out genztraders.com, link down below. And with that being said, let me know down below what you guys think about Lightning E motors. Do you plan to buy the SPAC? Do all that good stuff, and I'll see you guys next time. Take it easy, clocking out for now. Peace.